Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Matthew Martin, senior U.S. economist at Oxford Economics. Matthew, thank you so much for joining me.
Thanks, Brittany. Pleasure to be here today.
A little bit over a month after Liberation Day, President Trump unveiled details for a framework for a new trade deal between the United States and the United Kingdom. And this is the first trade deal since President Trump unveiled that sweeping tariff plan. Based on what we know so far, based on the details that came out, what sticks out to you? What are some of your takeaways?
Yeah, I think there's some pretty key components to it and some definite takeaways for future trade deals that we can get into. Details are still coming out. It's certainly kind of at a very high level. I think there's still weeks and months to come and kind of hammering out the finals. But some ones that stick out to us are obviously some wins, you would say, for the UK. Mainly on the auto side, they are now going to be facing a 10% tariff rather than a 27.5% tariff on the first 100,000 cars imported into the US. Now, that is certainly what you might call a win, and that's what the UK is touting it as, but that's still an increase of 7.5% from the prior 2.5% they faced in 2024. So still a pretty large increase, but less so than we previously thought. There's also now going to be a 0% tariff applied to steel and aluminum products imported into the US from the UK, which is obviously down from the 25%, which you certainly could categorize as a win. Now, that's a big piece for the UK. I think about 9% of their exports in steel go to the US, but the US imports only around 1% of its steel from the UK. So really the impacts are a bigger win for the UK than the US overall. There's some additional details in terms of expanded market access for agriculture and some commitments to work together on pharmaceutical imports into the US from the UK, but those details are still pretty limited at this time. For the US, it just is mainly expanded market access in agriculture, as well as some machinery, around $5 billion in exports, and then a commitment of $10 billion for aerospace purchases from the UK, specifically from Boeing. So there are some wins from the US there, but still very high level and very industry specific at this time.
It's interesting what you said, that this is a bigger win for the UK than the US. I mean, is this a good deal for the United States? Was it worth all of this tariff whiplash and the back and forth and the potentially souring of relationships with our allies?
I think that's kind of a broader point to a lot of the negotiations that'll go on. I think from the Trump's administration's point of view, this is definitely a win. I mean, first and foremost, the effective tariff rate on all other goods is still going to be 10%. So that's going to be impacting a lot of other markets. So really, this trade deal is very specific to certain industries. So I think Trump would still say it's a win. That's how he's touting it in the fact sheet and truths that he's put out since. And the expanded market access is certainly kind of a big piece. If we kind of amounted that to $15 billion, that's a lot of money. But when you kind of put it in terms of the fact that they didn't kind of specify, is that this year? Is that spread over multiple years? And even if it was just 1 year, that represents about 0.7% of total U.S. exports. So still a pretty small portion. Now, obviously, on the bilateral side, the U.S. exports around $80 billion to the UK. So $15 billion would be a large increase on a bilateral side. But again, from a total exports side, it's still pretty small. So, I think there's a lot of give and take here. I think both sides are touting it as a win. But I think the most important point to kind of come back to is, regardless of the industry, you're still going to see an increase in effective tariff rate. And that is going to have a big impact on UK imports and exports. And it's kind of still left to be seen whether this is worth kind of the back and forth.
The UK isn't one of the United States' top trading partners, so they don't crack the top 5. So what are exactly the economic impacts of this agreement?
I think it's pretty small. I think from a consumer standpoint, unless you were in the market this year for a Jaguar or Bentley, you're really not going to be too much impacted. And again, you're still going to be seeing a 10% increase of tariffs there rather than the 2.5% they increased or imposed last year. So really, you're talking about very high-end consumers who might be looking at these. Kind of your middle-income, low-income households probably aren't looking at those. From a business perspective, those who have been importing steel, this is definitely a win from them. But I go back to the point again that it's around 1% of total imports of steel come from the UK. So most businesses are still going to be impacted, or at least for now, still facing 25% tariffs. So the overall economic benefit is still pretty low and is still outweighed by the fact that all other goods are going to be 10% tariffed. So, it's still probably a net negative overall for businesses and households at this time, though there are certainly winners, those who are exporting ag products to the UK, as well as Boeing, who have received that kind of commitment of 10 billion in purchases. So there's very small winners in there, but I think as a whole, the economic impact is still kind of towards the downside.
And the markets, as we know, do not like tariffs and this tariff whiplash. And on Thursday, after the deal was announced, U.S. stocks reacted very positively to the news. So what does that market response indicate to you?
I think in general, this does kind of point towards a de-escalation in tensions, or at least trade tensions, and kind of sets the stage for further de-escalation amongst many trading partners. I think our baseline forecast has always been that July 9 deadline for the reciprocal tariffs that go in place was always going to be kind of come and pass, and that most countries are going to still see a 10% baseline tariff rate. And I think that's kind of what the market is probably still kind of reacting to, is that it's a modest de-escalation in trade talks. Now, I think it's still a bit muted. A 10% baseline tariff with only certain exemptions is still a large increase overall. And where we're still yet to see is a de-escalation on the China and U.S. trade relations. Now, obviously, we're set up this weekend to begin talks there. But even if tariff rates are brought down from their 120% to, I think Trump tweeted today, 80% tariff, is that really going to make a difference for U.S. importers? That is still a prohibitive increase in overall tariff rates. So I think there's still a lot of work to be done. And while the market response was generally positive, I still think there is plenty of kind of risk involved there.
Keir Starmer was not combative with President Trump after he announced the tariffs on the UK. I'm curious, even after this deal was announced, you do see that 10% baseline tariff. If I'm a leader from another nation that's going to the negotiating table with the Trump White House, what does that indicate to me? I mean, does that mean everyone now, that 10% baseline, that's in effect for everyone?
I think it's tough to kind of forecast how these negotiations are going to go, just how tariff policy has been so back and forth. So I wouldn't certainly claim that that would be the starting point for most trading partners. I think what they would see is that there really wasn't large scale kind of concessions from the U.S. They still start with a baseline 10%. Others might face a higher baseline. So I don't think you're likely to see a lot of concessions from other trading partners themselves, maybe sectoral specific ones. And I think it really kind of highlights the fact that trade negotiations and trade agreements are very detail oriented and very hard things to kind of push across the line. There might be small agreements put in place, but kind of wide ranging changes to the overall trade landscape kind of through these trade agreements is unlikely to be unlocked in negotiations over a week or months. These take potentially years to do, even when you're doing a one-on-one, now let alone doing 90 plus trade agreements. It's very hard to see kind of very detailed approach to these negotiations. And it's likely to kind of really, again, continue to focus on very sectoral or industry specific exemptions or concessions rather than kind of broad scale trade de-escalation talks.
And this is one deal down, dozens and dozens to go. We know that the U.S. and China officials are meeting in Switzerland this weekend to begin trade negotiations there. When you're thinking about trade negotiations between the United States and other nations at large, what specifically are you looking out for next?
Again, I think a lot of this is going to be kind of, do we get a more detailed approach when we go to these trade negotiations? Is it more of this just very sectoral exemptions and we still have a 10% baseline for all other goods? Are there further kind of wins that the Trump administration can tout, which eventually could maybe lead to further de-escalation kind of globally? I think that's really where the balance is going to be kind of met, is how much is Trump willing to kind of give and how much are other countries willing to give as well? I think from a very high level, I think kind of the economic impacts are still going to be large. I think we're still looking for increases in good prices across the board here in the U.S. That's going to impact consumer spending, business investment, and we're still looking for kind of an overall pretty dark and stormy outlook over the next couple months and quarters. Now, that could be slightly less so if we see some kind of bigger concessions made by other countries. Maybe that could get the ball rolling to further talks. But again, I still think it's a very uncertain period for not only households, but businesses as well going forward.
I'm curious how dark and stormy you think exactly it's going to be getting. Do you think, I know economists have said that these tariffs could push us to the brink and beyond of a recession. Do you think that by seeing this first deal, I mean, what are the chances of a recession here, in your opinion?
I think the chances of recession are kind of declining as you start to see some of these trade negotiations put in place. Obviously, we're seeing kind of positive market reactions, which will kind of benefit households through higher stock prices, which is a good thing. Businesses might not be as willing to kind of cut back on investment, or might be more willing to expand, assuming that trade negotiations kind of create less uncertainty. So that would still be maybe a positive force. So I think recession risks overall are declining, but they're still kind of very elevated. And for the most part, the biggest hit is going to be consumers. If they start to see kind of higher goods prices, that's going to eat into their disposable incomes. That might cause them to pull back on spending, which then businesses will then see less demand. That could push them towards either layoffs or reduce their hiring plans, which would then feed further into decreases in household income. So really, I think overall, we're looking for pretty weak growth over the coming quarters. We're not looking for anything negative over the rest of the year. But paired with high inflation is really going to be a kind of a worst of both outcomes for the economy. Slow growth, high inflation, obviously known as stagflation, is going to be a hard path for not only businesses, consumers to kind of fall through, but obviously the Federal Reserve as well.
Well, slow growth paired with high inflation, no one wants to hear that. But as we see more trade deals develop, I hope you come back on and join me and break them down. Matthew Martin, thank you so much for your time today.
I appreciate it. Thanks again for having me.